The power of rental properties, tax-free sales in Germany. Imagine this, you buy a property, let it generate income for years, and then sell it completely tax-free. Sounds too good to be true? In Germany, it's not only possible, but also one of the smartest strategies for building long-term wealth. In this video, I will break down why rental properties are so powerful, how the tax-free sale rule works, and what you need to know to maximize your profits. Stay tuned, this could transform your financial future. So let's get started. You see here a table. So we look at a property investment for 10 years because you can sell a property in Germany after 10 years totally tax-free if the property was rented out. Okay? So the property value initially is 348,000 euros, typical 2 or 3 room apartment, depends on the city in Germany, obviously. So you see here, cash incoming is the income out of rent, so rental income, plus the tax refunds, minus cash out, interest, repayment of the loan, non-deductible costs, because some costs are not tax deductible, deductible costs, which results in an annual cash flow and obviously also monthly cash flow. So let's look into the numbers. So property with the value of 348,000 euros generates in year one, the apartment is already rented out, 16,800 euros, so annual numbers. You would generate a tax refund of 2,247. You have to pay interest in year one of 13,000, roughly 14. You have a repayment of the mortgage of 3,500. Now you might say, well, this is a pretty low repayment rate. True, but we typically design strategies in a way that you build up real estate assets first. So you buy as many properties as you can first. So we protect your cash flow with a low repayment. And when you stop buying further property at some point, then we start repaying the loans faster because it makes more sense to have more properties in comparison to less properties or 2 properties which are paid off sooner. Okay? Then we have non-deductible costs of 600 euros annually, deductible costs of 2,160 euros, so costs for property management, for example, and also the annual cash flow, which would be negative 1,112 euros, which is monthly 92.70. So you see, real example, you can buy a property after taxes with a co-payment of roughly 100 euros per month. Okay? Now you see that the income remains the same because we don't assume that the tenant is leaving the apartment. We assume that the tenant is staying. Okay? Which means you can only increase rents after 3 years, so in the 4th year. So you see in year 4, you increase the rent by 15%, which is the minimum amount which is legally possible. So the new rental income would be 19,320, which results in a lower tax refund because you only generate tax refunds out of your real estate investment if you make, let's say, losses on paper because of your tax deductible costs. So if your income is growing and your interest is becoming lower because you are repaying the mortgage and you only pay interest on the remaining loan, so the interest is less every year and the repayment grows automatically every year. Okay? So you have in year 4 19,320 income because you increase the rent, you have a lower tax refund. You pay back the mortgage faster with the same mortgage rate in total because these 2 numbers, interest and repayment, are always the same. So if you pay less interest, you just pay more back to the bank. The non-deductible and deductible costs remain the same. So we see in year 4, we already have positive cash flow after taxes. So it would be 13 euros, already passive income, while you're actually building up wealth because you're still repaying the mortgage. So let's look at year 7, because this is the second time we can increase the rent. So we have 222,000 euros annual income, and this is also likely. If you might wonder if it's likely, in big cities, the average rental increase in that city is actually 5%. And there are still many people who are not increasing the rents. So if the average is 5%, then you obviously have the option to increase the rents even faster, especially if the tenant is leaving the apartment. Okay, but let's assume the tenant is still staying in that apartment. So we have the annual income of 22,000 euros. Now you see we don't have any tax refund anymore. So now you have to pay taxes because your income is higher than your expenses. And that's the reason why I'm always saying, please continue to invest in real estate. Because if you buy more properties, you add more tax deductible costs. So before you start paying taxes, why not using the profits from the first apartment to pay off the second apartment instead of just paying taxes? Okay? So the tax refund is not there anymore. We actually have to pay taxes because interest is lower. Income is now significantly higher. But still, since the income is higher, even after taxes, you would have net 136 euros per month passive income. And now you see why it's important. If you would save the taxes here and you would invest in another property, you would save taxes here. So your overall wealth building would be just faster because you avoid the taxation of that real estate investment. And then we have year 10, which is beautiful in the 10th year that we can sell tax-free. So again, you increase the rent after 3 years, so in the 10th year. So new annual rental income would be 25,000 euros. Now, we don't have that many tax-deductible expenses in comparison to that income anymore, which means we would have to pay 2,000 euros on taxes. But still, only part of your profit is obviously taxed. So you would still have a positive cash flow of 278 euros per month net, including management of the property, maintenance of the property, mortgage. So all the costs are included. And now you might say, well, what is he talking about? He's talking about 100 euros profit, 200 euros profit. That's not that much. Well, two things. First, you obviously have the high monthly cash flow when the property is paid off. Second, you don't make the money on the monthly basis. You really make the money when you sell the property. So let's say we have a starting value of 348, as mentioned already. We have a final value after 10 years of 424,000 euros. Now you see over 10 years, we assume an appreciation of 2% per year, which is also really conservative. In big cities, you typically have 4 to 5% appreciation per year. Okay? Even if we look at the last 10 years with COVID and higher interest rates and so on, over 10 years time span, you would still have 5% appreciation in big cities. In most of them, but we only calculate conservatively with 2%. So the value grows from 348,000 euros to 424,000 euros. You have 300,000 euros mortgage left because we want to protect your cash flow so you can buy more properties easily. A gross difference of 117,000 euros. Your total investment, so profit, 117,000 euros gross. Now we have to include 14,000 euros as costs because you had some costs to buy the property. So notary fee and land transfer tax. We typically avoid having a property agent included. But you have a down payment for the purchasing costs. And you also have some negative cash flow in the first 3 years, which is also included here. So you invest 14,000 euros yourself, you have a profit of 117. If I deduct the own investment, you have a net profit of more than 100,000 euros after 10 years being entirely tax-free. So if you can, let's say, 8x your money or 7x your money over 10 years, fully tax-free with one property, well, then it's my recommendation that you do it as often as you can. And this is exactly what we do at Proper API, that we design such real estate strategies which put you in the position that you can actually build up a vast real estate portfolio without huge own investments. So you see, on a monthly basis, you're not investing much. Also, initially, you're not investing, well, that much. So it's actually pretty easy, if you know how to do this, to build up real estate assets in Germany, which is definitely one of the solutions of how to become financially free in Germany and how to actually achieve financial goals in Germany. You should definitely look at real estate for sure. So, the power of rental properties. To sum it up, rental properties aren't just a source of steady income. They are a powerful tool for long-term wealth creation, especially with the opportunity for a tax-free sale after 10 years. But as with any investment, success lies in the right strategy. If you found this video helpful, don't forget to like and subscribe for more tips on real estate, finance, and tax-optimized investing. Drop a comment below. Are you planning to invest in real estate, or do you already have experience? I would love to hear your thoughts. Thanks for watching. See you next time, and remember, your success starts with the right decisions.